Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors. Monday, May 13th, after the close. Apologize about the lack of a video on Friday. We had some logistical timing issues, so we're bringing this to you on Monday, which is just as well because markets have changed. We give you a quick update in some of our thoughts. Global trade dominating the headlines, dominating the markets. Obviously, with the weakness we saw today, traders and investors were not anticipating a no deal scenario. Last week had some weakness, started to price in the fact that it wasn't going to be a happy ending to the Xi-Trump conversations. But in terms of no deal and a real stalemate on some different items, that wasn't priced in. Thus, we see 3.5% pullback in the NASDAQ, 2.5% pullback in the spiders today. So where are we? Well, you can look at this two different ways, and we try never to take a black or white view of the markets. If we were looking at today's action and throw in last week's 2.5% decline in the S&P, if we were to look at that action in a short-term scope, we'd say markets have had a heck of a first 5 months of the year. S&P got as high as up 18, 19%. Q's 21, 22%. Natural pullback. Natural pullback of 5, 6%. We'll see if we can reset here, make a higher low versus January, and go from there. Bigger picture, does global trade issues redefine what the capital markets are going to look at the next 1, 3, 5 years? Is there now a cap on trade revenues, profitability, earnings, margins, the oxygen of a balance sheet and earnings statement? Margins, margins, margins. We don't know that at this time. Nobody does. You have the G20 meeting in June. There'll be some more conversations there. Always tricky on headline events to try to find a level that you're comfortable with putting money to work. So we're really going to be cautious over the next few days, but ideally we're using this as an opportunity. If you look in our U.S. Equity portfolio, we're about 17% cash, so we do have some firepower there. We do have some areas we like. We're going to see if the market comes down to those levels. Some of those areas are very domestic centric. We're going to try to stay away from areas that have a supply chain problem, areas that have a overseas manufacturing headache, areas that may be exporters to Asia. Tricky there. One area that we've seen hold up pretty well on the domestic space is insurance. That's a member of our tactical trend portfolio. Traded very well last week in a fairly weak market, and although down today, was down much less than the market. That's the example of something, property and casualty insurance, that is very domestic. Throw life insurance on top of that as well. Really isn't affected day to day, week to week by what's happening in the foreign markets. So we'll take a look at where we trade Tuesday, Wednesday. It's going to be a very whippy market, a lot of news, a lot of unconfirmed news, a lot of speculation. We really have to just get some areas that we feel comfortable from a valuation standpoint and get money into those areas. It may be this week, maybe next week, and maybe next month. Try not to define the capital allocation on a time frame, but more on a valuation standpoint and the analytics of the market. In our trading portfolio, the portfolio run by Dr. Chen, we've been in cash. We'll take a look at what some of his analytics are giving us in terms of a buy signal. There was no buy signal today. We derived some of those signals from a multitude of analytics. We'll let you know if we see a buy signal this week. Have a great week. We'll speak to you on Friday.